Good afternoon, everybody. This is Bob Iacchino along with Mike Arnold from Path Trading Partners. This is an afternoon Path Chat covering the futures markets. The most important piece of news today, outside of the EIA crude inventories, which I'll get to in a second, was the FOMC statement. Now, obviously, there was no change on rates from the FOMC, which nobody expected any change. But there were a couple of key changes to the FOMC statement. Quick paraphrase, the Fed says growth slowdown in Q1 likely to be transitory. Let's take a look at exactly how that statement changed. The statement changed from the committee expects that with gradual adjustment in the stance of monetary policy, economic activity will continue to expand at a moderate pace. They changed that to the committee views the slowing in growth during the first quarter as likely to be transitory and continues to expect that with gradual adjustments in the stance of monetary policy, economic activity will expand at a moderate pace. So they basically acknowledged the slowing, but said that it's likely to be transitory, which is what a lot of people have been saying. That could come back and bite them if it's not correct. They also changed a statement that said, committee's 2% long-run objective, excluding energy and food prices, inflation was little changed. They changed that to committee's 2% long-run objective, excluding energy and food, consumer prices declined in March, and inflation continued to run somewhat below 2%, essentially saying that their 12-month inflation is running close to its 2% goal. Now, Fed funds futures continue to price in basically one more hike by October, and then there's not enough data to really look at anything else. So Fed's baseline is 3. Seems to me they're saying that their baseline is still 3. The market's still looking at 2 with one of those done already. In terms of the EIA crude numbers, I told you I'd come back to that. Crude oil inventories declined by 930,000 barrels, so ever so slightly bullish. And gasoline inventories increased by 191,000 barrels. We were looking for a much higher increase than that, a 1 million barrel increase. So this actually was an ever so slightly bullish report. Crude oil finished up very slightly, about 14 cents. So let me turn it over to Mike now to let you know what he's seeing on the charts, because the price action is a lot more expressive than the data was today. And you can see the VIX crept up a little bit, but didn't really go anywhere. So Mike, it is all yours.
Okay, thank you very much, Bob. So, quick VIX check, even with the FOMC minutes coming out today, nothing surprising going on. The VIX rallied back up above 11, but then closed back down at 1068, so still no fear in the market. Came up, tested the declining rotation zone, very interesting, then fell back down. So, nothing really to report with the VIX. Over to the transports. Transports inside day today. High of today and low of today did not exceed yesterday's high and low. So, on a rally tomorrow, first level of resistance is going to be around 9160, followed by 9200 to 9218. And if that's broken on the upside, potential then rally up to about 9270. To the downside, very key support right around 90.80 to 90.75. Right in there is going to be key support. If that's broken, you could see a move down to 90.40, then about 90.27. Over to the industrials. Industrials came down to our rising rotation zone, just dipped below 25% Gann level, but then closed significantly above it. So tested that 25 level, but held. Now we have 8 pushing the price. On a retest tomorrow to the downside, 20,895 to 20,900 is going to be key, followed by about 20,870, and then our cluster area right around 20,811 to 20,800, where we also have the rising 21 coming in. Resistance, we're looking at about 20,983 Then 21,000 is going to be some minor resistance, and if we rally through that, then you're going to watch for a retest of the 21,070 level, and then if that is exceeded on some kind of very big rally, 21,160 is your next level up. Over to the S&P. S&P also came down to test the rising rotation zone and the 25% GAN level. Still closed down on the day, but significantly off its lows. On a drop tomorrow, 2,376, first level of support, then not much down until we get to 2,368 to 2,366, and if that was broken, 2,358. On a rally back up, we have resistance at the 2,385 to 2,386. Then we're looking at about the 2,390, and then nothing much until we get up to the 2,394 area. And if that is exceeded, you could see a potential rally to 2,400. Over to the Nasdaq. Nasdaq pulled back today, almost traded down, just slightly higher than our 12.5% GAN level, around 56.05. That's going to be some minor support tomorrow, 56.05, and then we're going to be looking at about 55.96, and then if that's broken, 55.76, followed by 55.67. On a rally back up, we're watching for resistance around 56.29, followed by 56.40. And then if that's exceeded, we could see a rally up to 56.78. Let's switch over to crude. Crude oil, another sell-off today. Lots of buyers stepping in right around this 47.30 to 47.50 area, so pay attention to that. If crude heads down tomorrow and can get through really this 47.30 area, you could see a pretty quick drop down to 47 to 47.04. If that level's violated, then the next major level down at this point is 45.21, which would probably not be hit tomorrow, but we'll need some more price action before we could do intermediate term GAN levels in there. On a rally in crude, 47.85 first level of resistance, 48.19 second level. Then we could retest this trend line, which would come in right about 48.50. And if that's exceeded, 48.71 to 48.84 is going to be very key resistance in there. Switching over to copper. Copper, really big drop today in copper. Let's see, that was down about 4.48%, actually closing below our rising trend line. On a move, continued down lower tomorrow. $2.4951 is going to be the first level of support. Next level is about $2.4872, and then if that's broken, we could see moves down to about $2.4657, then about $2.4530 are the next levels down. On a rally back up, you're going to see some minor resistance right around $2.5301, then $2.5349, then $2.5405, and if that's all broken, next key level up is going to be about $2.5588, and then $2.5755. Over to gold. Gold, pretty big drop here also today, down 1.45% on the day, pretty much closing at the rising trend lines. You cannot ignore the path trading trend lines. They do provide a lot of valuable price action information. On a continued move lower tomorrow, 1233 to 1231 is going to be key support. If that's broken, not really another support level down until 1220. On a rally back up, minor resistance right here about this 1239 to 40 level, then significant resistance 1245 to 1246, and then if we rally beyond that, 1252 to 1254, and above that 1257 to 1258. We're getting overextended from the rotation zone, but this can easily head lower still. Silver. Look at the move in silver if you want to. This is why you don't want to try to pick bottoms. You know, this just keeps dropping, and you can see it hit pretty much dead on another one of our key GAN levels, 1642. The low today was 1641.50. So, on a continued move lower, we're going to be watching for 1622, followed by 1604. There's really not much other support or price action that we can call out just yet. So those are the two key levels to the downside. On a rally back up, watch for some minor resistance right around 1663. Then we're going to be looking for a potential retest of the 1679 to 1682 level. Then again, 1688 above that. We'll have to wait to see how silver is going to play out over the next couple of days so we can do some shorter term GAN projections and other key GAN moves. But that's what we'll be watching for. Until that happens, we don't have any other price levels for you. I'm turning it back over to you, Bob.
Thank you, Mike. If I could, I just want to really quickly touch on the metals moves. Copper had some inventory increases at the London Metals Exchange, and some of the Chinese data, the manufacturing data specifically, came in weaker than expected. China is the largest consumer of copper. But when you see all three metals, copper being the most important base metal, gold being the most important precious metal, and silver being a mix of the two, when you see all three of them getting hit like this, you can bet it's dollar related. So we did see the largest up move in the dollar index since mid-April, since about April 13th or so. So we saw dollar strength post the Fed numbers, or rather post the Fed statement, which caused the inverse relationship to take over in the metals. There was probably some downside going on already, and then with the Fed statement, it accelerated when the dollar strengthened. When the dollar is strong, metals are more expensive for foreign buyers, therefore the demand for those metals drops. The reverse happens when the dollar is weak. So that's what some of this drop in the metals was. Thanks for watching, and we will talk to you guys in the next Path Chat. Cheers, everyone, and thank you, Michael.